Hi again, I'm Penny, and welcome to my YouTube channel, Retire With Me. During this video, we're definitely going to talk about a health insurance hiccup that I encountered since retiring early. But while I'm talking to you about that, I'm going to be making some banana bread. This banana bread that I make is a family favorite. I never throw away ripe or even overripe bananas. I put them in the freezer. And according to my family, they look a little bit gross. They do look a little bit gross. This one's in the process of thawing out. But once you take the peel off and smush it up with your masher or a fork, it's beautiful to bake with. Anyway, back to the insurance story. So at the time that I was offered the early retirement package, my husband and I, neither one of us were 65, so we weren't eligible for Medicare. I was 62, soon to be 63. He was 63, soon to be 64. We were covered by my company's medical insurance policy and dental insurance policy, and quite honestly, we were so accustomed to being covered by that policy that we weren't educated really in anything else. Well, we had to get educated and get educated fast. So we made an appointment with our local insurance company, and we discussed our options, and we learned that we actually were qualified for some kind of health insurance that was subsidized. Now, maybe it sounds a little crazy, but honestly, I had no idea what subsidized meant. I did not tie that into Affordable Care Act and Marketplace at all. I just thought, wow, that's quote unquote somewhat affordable. So that was one of the key reasons that we decided to go ahead and accept the retirement package. I do remember while we were talking to the health insurance representative, I do remember me kind of laughingly saying to her, could our current administration somehow harm our access to this subsidized health insurance? So maybe a part of me was like putting the dots together. But she didn't say anything. We all just kind of laughed. And we decided that yes, we were going to take this insurance policy and go ahead and retire early. Well, then I learned that the end of 2025, the health insurance policy subsidies were going away. Okay, so does that mean my husband or I have to go back to work? Does that mean that the subsidies are going to get so high that we can't afford them? Does that mean we have to go without health insurance until Medicare is available? I don't think any of that was really an option, right? So this is an effort on my part to educate myself a little more about the Affordable Care Act marketplace plans and what these premium tax credits do for whom. So in 2021, the American Rescue Plan, which is part of the COVID-19 relief plan, made some premium tax credits available to more people, including to some with a household income of 400% of the federal poverty level. In other words, prior to 2021, if you were at 400% of the federal poverty level, you had no access to help for these marketplace plans, but that cliff was removed. And just to clarify, because we talk about premium tax credits a lot, premium tax credits are a refundable tax credit that helps people afford health insurance purchased through the health insurance marketplace. So when we refer to a subsidized health insurance, that is a premium tax credit. Then in 2022, Congress extended the premium tax credits through 2025. This is part of the Inflation Reduction Act. So some examples of federal poverty level incomes in 2025, because personally I had no idea about this. For a family size of one with an income of $15,060, that's considered 100% of the federal poverty level. For a family of one with an income of $60,240, that's considered an income of 400% of the federal poverty level. For a family of two with an income of $20,440, that's considered 100% of the federal poverty level. For a family of two with an income of $81,760, that's considered 400% of the federal poverty level, and so on and so on. So starting in 2021, the premium tax credits extended some of these benefits and helped paying for some of these marketplace plans to
families at 400% of the federal poverty level. So to summarize, some families at 400% of the federal poverty level that meet the eligibility requirements might qualify for a subsidy to help them lower the cost of health insurance premiums for plans purchased through the marketplace. There's just one problem. The premium tax credits are set to expire at the end of 2025. I learned this, or I realized this just a little bit too late for me. So in January 2026, families at 400% of the federal poverty level that previously met the eligibility requirements may no longer qualify for a subsidy, or their premiums may go up substantially, as much as 75%. That's a lot. This affects anyone between the ages of 60 and 64 who might have retired early, in part because of the availability of these premium tax credits. So what should you do now if you're in this boat like we are? Well, as soon as possible, meet with an insurance representative to discuss your options. Do this as early in the fall of 2025 as you can. Determine if you'll still be eligible for a premium tax credit. And if you are, how much of an increase in premiums should you expect? One option is you can keep your current plan and pay the full price until you turn 65 if you're able to do that. Or you can shop for a new plan with lower premiums, maybe higher deductibles, to keep you covered until you turn 65. And finally, one last option is to look for coverage that's not on the Affordable Care Act marketplace until you turn 65. I didn't explore that much myself yet, but I might still have to.
So what you just saw was the end result of my trying to educate myself about what was going on with these health insurance subsidized health insurance policies, premium tax credits, and all that stuff, and it's going away, or is it not going away? So I figured I'd just put it in a format that maybe somebody else could benefit from it other than me. And actually look at what our options are, Are we still going to be, if they take away the premium tax credits, are we still going to be eligible for these subsidies? Or are we going to have to pay the health insurance full price? Can we afford it if it's full price? No, I don't think so. But yet, going without health insurance isn't an option either, going back to work. All these things are on my mind. What I'm hoping that our government decides that enough people are going to be so upset about this that they're just going to have to extend it a little while longer, or they may not get reelected in 2026. That's what I'm hoping. That might buy my husband and I just enough time to squeak it through to Medicare, but we shall wait and see. It's definitely been a hiccup to my retirement decision. I questioned myself a lot about it, but it is what it is. So that's it for today's video. Please click like and subscribe if you like this. I always forget, but please click like and subscribe. It would help me out a lot. Until next time, bye.